Hey everyone, welcome to the Leap Day edition of our CPA News Update. Bill Sheridan here with the Maryland Association of CPAs and the Business Learning Institute. Here's what's happening around the profession today, Monday, February 29th, 2016. First up, another 390,000 taxpayer accounts have been identified as potentially accessed by thieves that hacked into the IRS's Get Transcript online application. That brings the total number of accounts affected to approximately 724,000. The breach was discovered last May when the IRS initially identified possible unauthorized access of about 114,000 taxpayer accounts. Then last August, the IRS revised that figure to 334,000. The application on the IRS website, launched in January 2014, was intended to allow taxpayers to more easily obtain records of their prior tax filings. It has remained suspended since the data breach was first discovered. Read more about that at the Journal of Accountancy's website. Not everyone is hailing the Financial Accounting Standards Board's new Lease accounting standard, including one FASB member who voted against the standard, and a key investor group that has also expressed qualms. The FASB released the long-awaited leasing standard last week after a decade of work with the International Accounting Standards Board as one of their major convergence projects. While the other 6 board members voted in favor of the standard, longtime FASB member Mark Siegel disagreed with the guidance on renewal options and variable lease payments. He contended that it was inconsistent with other parts of the accounting standards codification that address customer options and contingent or variable amounts. In addition to Siegel's dissent, the CFA Institute, which represents chartered financial analysts, is also expressing a preference for the alternative approach to measurement that the IASB adopted. Read more about that at accountingtoday.com. It just became more expensive for taxpayers to fail to file for the tax returns. The new Trade Facilitation and Enforcement Act of 2015, a measure authorizing U.S. Customs and Border Protection, increases the penalty for failing to file a tax return. President Obama signed the new law on February 24th. The higher penalty is effective for returns to be filed after calendar year 2015, so it already applies to this tax season. The penalty is equal to 5% of the additional taxes owed for every month your return is late, up to a maximum of 25%. Previously, the minimum penalty for failing to file a return within 60 days of the due date, including extensions, was the lesser of $135 or 100% of the tax due on the return. Read more at CPAPracticeAdvisor.com. The Securities and Exchange Commission's push to step up policing of accounting fraud could have a lasting impact on the agency's work, bringing more cases related to poor internal controls and more actions against individuals. SEC Chairwoman Mary Jo White began her tenure in 2013 with a promise to refocus the agency on investigating financial reporting and disclosure problems after years dominated by the financial crisis cases. The push has led to a steady increase in those types of cases, 134 in the year ending in September, up from 98 the previous year and 68 the year before that. Read more about that at the Wall Street Journal's Law blog. Intuit reported 23% growth in the second quarter of 2016, with TurboTax Online units growing 12% through February 20th. That's outpacing both the company's guidance and the e-filing season to date. Read more at accountingtoday.com. Finally, I don't need to tell you this, but the rules of business success are changing in the 21st century, and so has the role of finance. The folks at Oracle know this intimately, and they're planning an event for April. It's going to be in Chicago, and that event is for anyone who has an interest in the future of finance. You're not going to want to miss it. It's called the Modern Finance Experience, 2 days of interactive workshops, customer case studies, and thought-provoking keynotes designed to give your finance organization a competitive edge today and in the future. The great lineup, includes The Big Short author Michael Lewis, the City of Detroit's CFO, John Hill, Oracle CEO, Safra Catz, and too many others to mention. It looks like it's going to be a great show, scheduled for April 6th and 7th in Chicago. I'll be there, so will MACPA Executive Director Tom Hood. You can get complete details at modernfinanceexperiencechicago.oracle.com. That's it for today, folks. Have a great night. I will see you tomorrow. Take care.